Good afternoon and welcome to Financial Report. Today's show inevitably focuses on the financial aftermath of last month's Japanese earthquake. In this report, we will investigate how Japanese tsunami turns to a global financial tsunami. We will focus on three areas, namely the impacts on the stock market, the response of the currency, and the investors' behavior towards risk. We have invited our market analyst Eric Zheng to analyze the stock market.
After the Japan earthquake happened on 11th of March 2011, the stock market reacted immediately. On the 14th of March, the Nikkei 225, which is most widely quoted average of Japanese equities, dropped by 6.18%. On the next day, the stock market all over the world started to react. Many shares dropped in value, even it was reported that it has gained one day before. Stock markets include Shanghai A Index and Hong Kong Hang Seng Index, which falls by 2.86%. In fact, the earthquake not only affects the economy and the stock market in general. Its impact were even more significant for shares in a few aspects. Shares related to oil, coal, renewable energy resources, heavy metal and construction were benefited, while shares related to shipping, flight, automobile and electronic manufacturing industry were badly affected. The reasons for drop in specific aspects of shares can be explained by market expectation and time value of money. Conventionally, the stock price is calculated by summing up all the present values. By the dividend growth model, the more the expected dividends, the higher the stock price. If a market has a good prospect in the future, the stock price will increase and vice versa.
We see that the stock market responds to the Japanese tsunami quite sensitively. How this be done? An authoritative guest speaker, the founder of WikiLeaks, Julian Assange, explains to us how information is to be so powerful. So, Julian Assange, what do you think about the fast reaction of stock markets towards earthquake?
Well, stock market is just a game of information. The more information you obtain, the more easily you win the game. That's how people earn money in the past. However, in the 21st century, because of the advanced technology and internet, information becomes fully accessible by the investors. Also, by the enhancements of media, like the formation of Bloomberg and WikiLeaks. Inside information can no longer be hidden, but exposed to the world quickly. That's why the world market responds in just a few days after the earthquake.
After the study on stock market, we'll go to the currency part.
How come our Japanese yen surged after the earthquake?
Well, this is because your country holds a lot of foreign investments and a lot of overseas debt, which is traded in other currencies. When the earthquake and tsunami strike, people begin to take their investment back and change them to yen. Together with the inflationary efforts of rebuilding, huge constructions are needed which boost the GDP as well as the currency.
Yes! Our people love our country so much. Anytime the country needs them, and they will do their best to help our country. We would even trade for our foreign investment back into yen to support and help the country in rebuilding.
Well, I think the most important thing now is to help Japan in strengthening its economy by stopping the surge in Japan's yen. It is because Japan has a debt to GDP ratio of 200%, which the relative strength of yen affects many other countries which hold Japanese bonds. Moreover, Japanese rely so much on export. If the currency increased so much, it would definitely affect her export market.
And our central bank has pumped millions of dollars into the market. So, may G7 help us to stabilize our currency.
Yes.
Last but not least, we'll go to the part about risk.
Oh, let me buy the stock.
Stop! Don't you realize that the global investment atmosphere is so bad? The volatility index has reached 30 some days ago, which is about double of the normal level, which means that the general public has no confidence on the market. Gold has been a good asset for storing value, but now even if expert investors will not consider investing in gold market, it's simply because they want to pull more cash to cope with the emergent needs. So, pull more cash.
I will consider that.
No! Oh, what are you doing here, young man? I'm a fund manager, and I bought a lot of catastrophe bonds. Oh dear, the Japan earthquake must have turned to go bad. I've attracted by the high coupon rates of catastrophe bonds, but now I have to bear a debt of $3 billion. So there's no hope. I must jump! No! The financial tsunami is one of the most serious events this year. The impacts are long-lasting and closely related to our lives.